So, welcome to this episode of Crap No One Tells You. With me today is Rick Millham from Millham Insurance. And we're going to have a very exciting conversation about insurance, which is everyone's favorite
I'm
topic.
so glad you think it's exciting, Gummy.
So,
I do, 33 years in the business. I think it's kind of exciting, but people don't always see it the way I see it.
there you go. So, let me start by asking the basic question. What is some crap no one tells you about insurance?
Oh, man.
That's a big one.
How long is this podcast? 2 hours, 3 hours? I could tell you all kinds of stuff that nobody tells you about insurance. That's kind of a big question. We do insurance, both, business insurance and personal insurance. There's a lot of things that you could unravel there. But I think for maybe the regular person watching a podcast who's really looking for probably thinking more in the auto and homeowners realm, maybe umbrellas, things like that. So maybe we'll go down that road and we'll see where that leads us. And then maybe we can, you're the boss, so it's your podcast. So you could tell me where you want it to go.
So let's talk a little bit about the insurance that people generally would purchase, right?
Yeah.
So you're talking auto, you're talking renters, homeowners.
Yep.
Most people have no clue what an umbrella insurance is or
Yep.
why they need it, right?
Yeah.
So what are some things? Let's start with the auto part of it. Like
Yep.
that by itself is that could probably be a 30-minute episode by itself, right?
Yeah, it sure could be.
So, I always, the 15 minutes could save you 15% or less always rings in my head.
Yeah.
And I always tell people, I'm like, well, 5 minutes with the right insurance agent could make sure you're properly covered,
Yeah.
which is far more important.
I always say that, you really need to be suspicious of an insurance company that's spending their money on advertising versus spending their money on their customers, right?
And spending money on advertising, having you save money
Yeah.
rather than being properly covered, right?
Yeah, that's an old just kind of angle because, agents tend to be paid 10 to 15% commission. And so that was the idea of save your commission by going with the insurance company direct.
Oh, that's where that came from.
Yeah. Mm-hmm. So, get rid of the professional that could actually give you wise counsel on the proper insurance coverages, go direct with us and save that. But, I always tell people the insurance industry is, they're smarter than that. So there's no insurance company that's going to leave 15% on the table.
No.
If the whole industry is charging you this and they're going to charge you 15% less, trust me, they're not. They're going to charge you 2% less.
Right.
Because they're not going to leave that money on the table. That's for sure.
So what is the difference between going what I call like carrier direct? Because we had a business insurance guy on and we kind of covered that same thing. So the difference between using a broker and going carrier direct, right?
Right. So, when you go direct with a carrier, you are literally a true direct is 800 number. It's dealing with an 800 number with a customer or with a customer service person. Every time you call in, you get a different person. So you're dealing directly with agents employed by the insurance company at a call center, in Elmira, New York, or in, wherever it is around the country. So that's direct. And then there's two types of agency setups. There are companies that shall remain nameless who have direct writers. Those are agents like, I'll say like Liberty Mutual on the personal side. They have direct writers, and those are agents that work only for the company, but they're in your community.
Got it.
Right.
So those are, I'll say it because I can. So those would be like Allstate or Erie, or where the broker is only allowed to carry that specific type of insurance.
Well, the
correct?
agent. So
The
I
agent,
wouldn't even
right.
use the word broker because
Okay.
that's confusing.
So the agent is only allowed to represent that single insurance
Yeah,
company.
State Farm, Allstate, Nationwide. So those
Well,
carriers, those agents only represent that carrier only.
Got it. While a broker has a multitude of carriers that they can shop from based on what the need is for you.
Correct. So an independent agent, which is what I am, we represent multiple carriers, and then we have multiple brokerage relationships. So that's like an in-between between the insurance company and the agent. And the reason there is such a thing as brokerage is because there are carriers, like my main carriers, like Travelers. We have a large book of business with Travelers, well over $3 million of business with Travelers in our agency. So we have a really tight relationship with them. But there are carriers that I would like to access, but I can't commit. to selling $1 million of business with them.
Right.
So how do I do that? I go through a broker. That broker has relationships with those other carriers, and they cull business from a lot of different agents, retail agents, and then they put that together in a nice book of business with that carrier. So whereas one agent can't give that carrier enough business to justify the relationship, the broker can, and then they will allow the agent to go through them. So it creates another layer, but it allows us as retail agents access to markets that we may need
Right.
under certain
And
circumstances.
certain insurance types you may not otherwise have
Correct.
access to.
Yep.
Because
Yep.
like the average consumer has no idea the amount of different types of policies that get written.
Correct.
Um,
Correct.
Like I remember reading, I think might have been, oh no, it wasn't Travelers, it was someone else. When they were insuring digging the Suez Canal, right?
Sounds like an interesting article.
That's what I said. I'm like, well, insurance is all about risk calculation, right?
Yeah,
And figuring out if something goes wrong, what's it going to cost us? Right?
absolutely.
That's basically what it boils down to. And I remember thinking, and I'm like, who had to do that math?
Like there are people in a back room somewhere.
Right.
That's not me. I can assure you of that.
But like, I can see it 2019 Suburban gets into a crash. What's the worst damage it can do or have done?
Yeah.
It seems like a reasonable calculation you can do based on data.
Sure.
Suez Canal, not so
Not so much. There's not a whole lot of experience with digging canals
right.
in order to lean back on. With cars, it's like, hey, statistically speaking, we can see where we've been in different regions and different types of, vehicles and, age group demographics and all the stuff that they drill down on now.
So let's take auto insurance, for example. I don't think people realize, and I don't even realize, how much data goes into calculating a single rate for a person.
Oh, it's unbelievable. I mean, I tell people that like commercial auto insurance is like a dinosaur because it's very basic, but personal auto insurance is extremely complex. There are I don't know 50, 60 different rating factors that go into determining what rate you get.
And do insurance companies use different types of factors, or are they all pretty much like they all use the basic 50, 40, whatever it is?
I would say that they all pretty much use the same types of factors. Some of them may put different weight on different factors, and some of them may have 40 and some of them may have 60. But I would say the general way that they determine rates for customers is pretty straightforward, pretty set.
Okay.
And probably the biggest, we always used to say, well, what's my claims experience, right? That's really a big factor. But these days, demographics, age, where you live, what kind of car you drive. But probably the biggest thing that they look at is your I would say credit profile. They don't look at your credit rating, but they look at your overall financial situation and along with the demographics and your claims experience to determine kind of where you end up. So things like
and then like driving history and all that stuff is on top of that.
It's on top of it. So, obviously it flexes that rate. If you've got, 2 tickets and an accident, you're going to pay a whole lot more than if you're clear.
Right.
Probably what people don't know about that is, credit does play a part in it. So, I always tell people it's not your FICO score, but if you have 20 credit cards and they all have a $10,000 limit on them, you could go out tomorrow and charge $200,000 without throwing a red flag.
Right.
And that may be something that an insurance company says is a negative. And so they might nick you for having too many credit accounts or delinquent credit accounts. That can have an impact on things. So they do look at that and they give you a score. They score you based on that. So it's kind of interesting.
That is very interesting. Like,
Yeah.
who would have thought that your credit report affected your insurance?
Yeah. The other thing that really is an impact is that the insurance industry looks at 5 years worth of claims history, which people don't think about. 5 years is a long time.
It's a long time.
I just got out from under a situation where we had somebody staying with us, and they asked to use one of our cars.
Mm.
And I said, okay. And she backed into a car that was parked, and I had to put it through insurance. And for 5 years, that was like the sore tooth that when you go to the dentist, you're like,
Right.
maybe they won't find it. Bam,
Bam,
and I'm
right.
like, I'm rating up my own insurance because, I'm an insurance agent. I can rate up my own insurance. So I rated up, I'm like, ooh, that's a good rate. I maybe I'll change. And then it pulls in the claim, and then it's more than what I'm paying. I'm
Right.
like, Newman, that kind of thing. So it's they look 5 years. And the other thing that people don't understand is that everything counts. You have to manage your insurance. And I know that sounds, I've heard it. I've been in the business 33 years.
You get a scratch on the door, you report it. It's $100 fix, but it's now still a blemish on the record,
Yep,
so to speak.
changes your rates. So you have towing claims. Your car keeps breaking down and you use your insurance for towing, or glass claims because you drive on 287 every day and rocks are kicking up and breaking your windshield and you have 5 glass claims. All those things count. Not at fault accidents count. Accidents where you report it but never collect a thing on it. They have an impact. And how do they have an impact? Well, if it's a not at fault accident, your current carrier isn't going to raise your rates, right? But what will happen is you come to me and you say, Rick, would you quote my personal auto insurance? And I say, sure, I'll do that. So I put it in and I don't pull any claims experience. I don't pull that 5-year report, right? And I get a rate and it's $400 every 6 months. I'm like, ooh, that's a good rate. And then I pull the report and I see 3 glass claims and it goes from 400 to 550 every 6 months. So,
So you're basically just prepaying for that glass damage.
Exactly.
That's what it boils down to.
Yeah, you're just having them handle it, then you're paying it back. But the point being that people always well, I shouldn't say people always like to, but after 33 years, people will say, well, that's what insurance is for. And I say, well, at some level, the answer is yes for catastrophic stuff and big stuff. But the reality is if you put a bunch of small stuff in, the insurance will get you back. You'll end up paying that back. So you have to manage your insurance. You have to think before you call that claim in.
Is it worth it long term?
And that's why we circle right back to going direct with a company or using an agent. That's where a professional independent agent is so important, because my customers call me and say, Rick, I just got a call from my daughter. She ran into, this just happened 2 weeks ago. She ran into a curb and flattened her tire. Should I use roadside assistance? And I said,
Not from the
it was my neighbor, right?
Now it's sounding like roadside assistance from the insurance companies is like not a good thing, because now they're like enticing you to call them.
Yeah.
I know you can't say anything, but I can.
But I mean, it's something you manage. My neighbor said, what should I do? I said, go into my garage, get my hydraulic jack.
So here's my tip
go
of the day.
get your
AAA.
Yeah.
Right. Like,
exactly. Go get your daughter and change the wheel yourself.
Okay.
And then take it to the shop and have him put a new tire on. I don't know what to tell you, because, again, he's got youthful operators, right? He's got kids, and I want him to manage his insurance so he keeps his rates low.
Look, I pay attention to my insurance, but I didn't even realize that stuff mattered. Like I would have not given it a thought and called my insurance and be like, hey, I need a tow to the shop, even though because they offer free towing.
Yeah.
Right. Like,
but it goes on your record. And then when you say, Rick, would you quote my auto insurance?
that shows up.
Bing, it's going to be $50 every 6 months more. It's going to be $100 a year.
Just because I had them towed my car.
Tow your car, whatever it is.
Right.
Again, those are loose numbers, right?
Yeah,
But,
I get it.
My point being, you have to manage your insurance, particularly as it relates to claims.
I don't think most people are even aware of this. Like, this is a perfect example of crap no one tells you, right?
Yeah, exactly.
And Geico's not going to tell you this when you call them. I can guarantee
Absolutely
you
not. Yeah.
But so it was funny, since we're talking about auto insurance. When I first moved to this country, which was like, mid 2000s, I always make it a rule. I kind of want to understand what I'm buying before I buy it.
Yeah.
So I sat down with someone like you that represented multiple things. And there was something he said to me that always stuck with me. And he's like, when looking at deductibles, and he's like, a lot of people go with the lowest deductible that they can. And I was like, okay, that makes sense, because if something happens, then you're going to use it and it's not going to be a problem. And he's like, yes. And now it's finally making sense when he said, but you wouldn't file a claim for $300. And now I'm understanding why he told me that. Yeah. He's like, so if we do the math, he's like, you can do $1,000 deductible And he's like, unless you intend on getting into an accident every 2 years, just the difference in premium, you will make up that deductible every 2 years.
Correct.
And he's like, if you take that money and just put it in a reserve fund, it's really the same thing, except you have the money, you're not prepaying it. He's like, now you can use that money every 4 years. You take 2 years worth and, go have a nice dinner.
Again, managing your insurance,
Right.
right? That's what it is. It's not, these are for-profit insurance companies. They're in the business of making money,
Mhm.
right? If the government was doing it, we could have all the claims you'd want. We'd just pay really, really super high rates and the service would be
Right.
horrible, right? But, I'm nothing against our government. I love our government, but, that's the way it would be. And so if you're going to have a for-profit industry that's going to do it, they're going to make sure they make a profit.
Right.
And so if you're not allowing them to make a profit on your account, you can be sure that you're going to start paying it back.
Right.
And
And it's not
going to get tough.
I just want people to understand they're not looking to make like 100%.
No.
But they operate on small margins, but it's large volume.
Yeah.
Right. Like
Yeah.
it's the Walmart theory.
And, Gummy, the reality is that, there's people that will actually beat up on the insurance industry. And I'm not here to defend the insurance industry, but the reality is September 1st of last year, we had 9 inches of rain and 3 tornadoes in this area.
Right.
And
which is unheard of, by the way, in our area.
Yeah,
Like,
exactly. Unheard of. And, the insurance industry showed up with millions and millions of dollars and adjusted claims. And I can tell you that, within a couple of months, probably 3 months for 90% of my customers who had claims, they were paid and taken care of. So, the industry is important. It's valuable.
Correct.
It shows up with financial resources when something super bad like a catastrophe happens. And so, yes, they're here to make money. And sure, is there greed involved in for-profit business?
And
Sure.
I tell people this all the time with any insurance, right? Is you can complain as much as you want about your rates until you have something catastrophic happen. And then you go, oh my God, I will pay whatever they want, because the sheer amount of money that they have now made sure that you recover is going to be invaluable for the rest of your life.
Yeah.
I'd like to. So I have weird stuff happen to me all the time, right?
Oh boy, here we go.
Yeah, I know. But
buckle up your seatbelts.
But it was one of those things that made me think, like, you never know what happens, right? Like, so I'm driving down the street the other day and I see this like smoke and I'm like, oh, look, someone's having a bonfire. And then I keep driving closer and the smoke keeps getting thicker and thicker and heavier. And I'm like, this doesn't look right. So I get there and there's a house on fire. Like, I literally saw the start of it because it was a tiny little, and there's a woman caught inside. She jumps out the window and, we catch her and all that stuff. Not the point of the story, but so I drive away, and as I'm driving away, I keep thinking, and I'm like, what if they're not covered properly? Like, that could be a devastating loss for someone if that house is underinsured or not properly insured, or like a lot of people rely on their home being their primary investment. Like, that's their nest egg.
It's their life. Yeah.
And if that isn't properly covered and something like that happens, that is long-term devastating, not just short-term devastating, but like long-term.
It's long-term devastating. And we get into, because, fortunately, knock on wood, we don't have in our lives a lot of catastrophic claims that happen, which is a wonderful blessing, right?
Absolutely.
But insurance is about insuring the catastrophe, right? It's about, especially with homeowners, it's about insuring the catastrophe. And so we get caught up in this, say 15% or more, or I need to, I get people, I need to lower my rate. What can I do to lower my rate? And, I have the conversation with them, what is cost to rebuild your home? Well, I don't know, and I say, well, at the end of the day, when you're going to care, is after a loss. I'll give you.
Right.
I'm gonna be a little vulnerable here and tell you a story in front of all your listeners, which is going to be really embarrassing. But I'm an insurance agent who's had a fire loss, and actually, it was something where I made a mistake, and I won't tell you how, but I ended up catching my detached garage on fire. And I can tell you at 11 o'clock when I woke up to see the back of my garage on fire, and I grabbed my hose and thought I was going to put it out. And obviously I didn't. And the fire company showed up
Yes.
and it burnt to the ground. And it was pretty humbling. But I can assure you when after the fire was out and the fire chief said, "Oh, well, do you have insurance?" I assure you that the only thing I cared about was having enough coverage. And then I actually literally went to my checkbook and made sure I had paid my premium. And I'm an agent, right?
Right.
So like if I screw up paying my premium, that's
Yeah.
bad, right? But I literally, if my policy had canceled and somebody said, "I want $20,000 to reinstate your policy and this claim will be covered," I would have written the check, right? Because there was no perspective on the amount of premium I was paying. It was,
Correct.
am I covered properly? So we, as an industry, because of advertising and marketing and all that, we kind of get focused on cost, and I get it, right? We want to all have a competitive rate and we don't want to pay too
Correct.
much. But in reality, people don't drill down onto, do I have the proper coverage? And that, after a loss, is the only thing you care about.
And I think the further along you get in life, like I have some kids that work for me, right?
Mhm.
And it's
You
funny
look like
'cause-
a kid yourself.
yeah,
but
oh, thank
okay.
you. But like we'll do our staff meetings or whatever, and occasionally I'll throw at them because we're a marketing company. I'll go like, "I bet you're with Geico," and they're like, "How did you know?" And I'm like, "Because you're their target market. You're
Yep.
the one that's most likely to buy from them, right?"
Correct.
Which is fantastic. But I always tell them, as you get older, as you start maturing, as you start accumulating assets, you need someone you can use as an advisor for your insurance, not someone you can just buy insurance from.
Correct.
And it was funny because one of the kids, well, one of the adults that works here went, "Oh, so you mean I need to like get adult insurance?" I'm like, yes, that's exactly
way
what
to
you
put
need,
it.
right?
That's the way to
Need
put it.
adult insurance.
Yeah.
You need to make sure you now, like when you first got your car insurance and you were with some random agency, you probably were living at home. You were covered under your parents' insurance. Now you're renting. Now you have property inside of your rental property. Like you have to make sure all of that is covered.
Yeah.
And it's funny once they have a conversation, because I always tell them, go talk to an independent agent.
Yep.
Like don't call whatever 800 number you have on hand. Just talk to them first and compare that to what you have experienced. And I'm going to say 99% of the people come back and go, "Oh my God, like I wasn't covered properly.
Yeah.
Like my life could have been ruined if I hit someone."
And
Like,
if you think about it, if you're calling an insurance company directly, right?
Mhm.
And it's and the person on the other end of the line is in Omaha, Nebraska, and they say, "Well, we'll set you up with 25,000 per person, 50,000 per accident, and 25,000 of property damage." Maybe in Omaha, Nebraska,
that's
there
fantastic.
aren't any
coverage.
cars, yeah, worth more than 25,000. But I was in the line at Starbucks behind a McLaren.
Right.
And
Rear
that was like
rear end,
150.
like rear end that one.
Yeah.
And see how much that costs.
See how much repair gets done on a McLaren for 25,000
Right.
bucks. So, right. And I always say, because we want to be trusted advisors for our customers. And I always say, listen, I can sleep at night knowing that my customers are educated, that
Mhm.
nobody's going to call me up and go, "I had a claim and I reported it and I had $1,000 deductible. I thought I had a $250 deductible." No, because we talk about it. We do what you talk about, which is, hey, what's the cost savings? Hey,
Mhm.
if you take this higher deductible, in 3 years you break even, and after that you're making money. So do you feel like you can, whether you can keep out of an accident for 3 years?
It's risk management.
It's risk management. Exactly. It's managing your risk, which is what it's all about. So
It's very interesting. So one thing I want to talk about is because this is the one I think people get absolutely lost on. And your traveler's book here, remind me, is so what exactly is umbrella coverage and who should have it for what reason?
awesome. So I'll answer that. I do want to circle back to homeowners too, because there's some
Absolutely.
things about a homeowner's policy that you need to know that a lot of people don't know. So let's make sure we hit that before we go. So umbrella policies are interesting because the name gives you a visual
Mhm.
of what they do. So let's just take a typical personal insurance account. So that's auto and homeowners, right? Your auto policy has liability limits. let's say it's 250,000 per person, 500,000 per accident, and 100,000 of property damage. And then your homeowners has a liability provision, right? So this is all bodily injury and property damage liability for your auto. You run into somebody, you run over their fence, you run into their porch, whatever, you run into their
People are like,
car,
oh, that
you run
doesn't
into
happen.
them.
I'm like, it
Yeah.
happens more than you think.
Bodily injury, property damage, right? And then homeowners policies have a bodily injury and property damage liability portion too. So let's say that you dig out the old tree and you're going to put the new tree in, and you leave the hole in the yard for tomorrow when you're going to put your tree in, and the kids in the neighborhood do flashlight tag without flashlights and run through your yard and fall in the hole and break both their legs, right? And the parents say, Gummy, I can't believe you left that hole in your yard.
Right.
Our kid was going to be an Olympic runner and we're going to sue you, right? Where does your liability come from? It comes from that homeowner's liability. Same thing off premises. So you're at the airport and you leave your briefcase out in the walkway, and the Olympic athlete trips over it and breaks their leg and can't go to the Olympics and sues you. Bodily injury liability off premises. So that's your homeowner's liability. And that's usually 100,000, 300,000, or 500,000. And I always sell 500,000 because it's not that much more expensive.
Right.
But then what does an umbrella do, right? An umbrella covers over your underlying liability, right? So your two policies, your auto and your homeowners, have liability down here, and then over top of it is the umbrella. Get the visual? It's protecting over top of.
So basically, let's say I'm coming to your house and I think I'm in park and I'm not. And I accidentally step on the wrong pedal and now gas. I run through your garage.
No, I'm suing your butt.
Yeah, well, yeah, I know. We'll get to that. Because that's the game we play with the attorneys. How can I sue you again?
Exactly.
Right?
I'm just kidding.
But so in that case, because this is like a weird where I'm now a guest at your house. I have my auto. You have your homeowners.
Yep.
I ran through your garage. You have a McLaren sitting in the garage. I don't know if you do, but
I don't. I wish I did.
Let's assume.
Or maybe I wish you did.
So like I take down the front of your garage. I sideswipe the McLaren, and now what insurance covers what? And like,
sure,
it's
so my
like a
so my homeowners is going to cover repairing my garage. My auto insurance is going to cover fixing my McLaren, and then both of those policies, let's assume they're with Travelers for fun, right?
Right.
They're going to subrogate against you, and your auto insurance liability is going to cover. So you have $250,000 per person for bodily injury, which you didn't injure anybody.
Correct.
But you did property damage. So you have $100,000 of property damage, which may fix my garage, but probably won't fix my McLaren. So let's say that you did $150,000 worth of damage and you have $100,000 of property damage. Well, we're going to have two checkbooks, right? If we have the umbrella, we have two checkbooks, right? We're going to have this $100,000 checkbook for the property damage as an insurance company, or your insurance company, is going to have that. And then they're going to have this $1 million checkbook. If you buy umbrellas in $1 million increments, this $1 million checkbook, 150,000. They say, yeah, Gummy's liable for it. They're going to write a $100,000 check out of this auto property damage checkbook, hand the check over to my insurance company, and then they're going to pull out their umbrella checkbook. They're going to write a check for 50,000 out of that. See, so it's excess. So here's your 100, and it's excess over 100 up to $1,100,000. So it gives you a clear $1 million.
And that could apply to your homeowners, your whatever. So like
auto or homeowners.
Let's say I ran over your foot at the same time as we had this because you were standing next to my car, which distracted me. So it's your fault, Rick.
Yep. Yes.
Now I have the bodily injury and the property and the
bodily injury and property damage.
Right. So whatever I would go over on any of those base policies, the umbrella then covers.
Correct. So let's say I'm over your house at a party and your dog bites me on the hand, and I'm a hand model. And so I've lost my whole career as a hand model.
Right.
I do have hands. I could have.
Okay.
At one point, I really felt like I was going there, Gummy, but I went to insurance because it was much more interesting.
Oh yeah,
you know how that
sounds it.
So let's say I'm a hand model, so I sue you and get a judgment against you for $600,000. Well, $500,000 is going to come out of that homeowner's liability checkbook. $100 is going to come out of the umbrella checkbook.
Interesting.
And one other thing about liability on these policies, and then I know I cut you off there, but defense costs are outside of the limit. So the attorney that is assigned to you to defend you on the dog bite claim is going by the insurance company is going to charge the insurance company, and that does not reduce your limits.
Okay.
So that
So
250, 500, 100, that doesn't get reduced. Those are pure limits outside of the defense. So we'll defend you right up until the point where we determine that you're liable and we negotiate a settlement, and
then
then
they just pay.
they pay up to whatever your limits are.
So this may or may not make sense. So really, if you are and we'll wrap this up with the homeowner's insurance.
Yep.
But if you own 2 vehicles, a home, you should really structure your auto insurance, your home insurance, and your umbrella insurance in a specific way to make it optimal for both payments and coverage.
Correct. I mean, really,
I just figured it out. I can be
umbrellas
an
are,
insurance agent now.
well, if you ever stop doing podcasts, you let me know. I'll interview you. That's for sure. So yeah, and umbrellas are relatively inexpensive. So umbrellas are rated based on underlying exposures, right? And so if I have a home, 2 cars, and it's my wife and I, and no kids, right? No youthful operators, no teens.
Right.
It's probably going to be in the range of $200 to $300 a year for $1 million. It's not expensive. Now we start to say, I've got 5 cars, I've got a home, I've got a place down the shore, a place in the Poconos, and I got 2 teenage drivers. Now it's going to probably be about $800 to $900 a year for $1 million umbrella because I've got a lot more exposure, right? A lot more things that are under that. But still, at the end of the day, it's a pretty darn economical insurance to buy. And I tell people, they'll say to me, well, how much umbrella should I buy? And I say, well, there's 2 things that factor into it. We can look at assets, asset protection, right? So if I'm worth $3 million, right? Maybe I want to have $2 million worth of coverage or $3 million worth of coverage, just based on the fact that I'm an attractive target to somebody who will sue. And the other thing is just, how do you sleep at night? So I'm not saying I've got, but let's say in the hypothetical scenario, I've got a house, I've got a beach property, I've got a Pocono property. I can't beat all 3 at once. I've got 5 cars. I've got 3 kids driving 3 of the cars. My wife and I are driving 2 cars, and I adopted 2 pit bulls because I think they're wonderful dogs, and so how do I sleep at night knowing all that's going on, right?
Like risk management.
Yeah, right. And so I might say, you know what, if I don't have $3 million worth of umbrella coverage, I'm feeling uncomfortable that I could lose everything. And that's really what you're insuring against is, if you have $500,000 of coverage and somebody gets a $1.5 million judgment against you, what happens to that other $1 million?
Right.
I'm now liquidating assets. I'm selling the properties and I'm paying that off. And we don't want to get there.
So to kind of wrap this up, I said we would get into homeowners a little bit.
Yep.
What are some, because I've been through this. So what are some common things people don't ask about or don't get asked about when it comes to their homeowners? Because I think that's we could probably do an entire episode just on homeowners insurance.
Yeah. And I'll hit the highlights.
Okay.
But a couple things definitely people don't know. In the state of Pennsylvania, insurance companies cannot cancel you for claims on homeowners. People don't know that. What was the idea? The idea was that the legislature was trying to protect customers from being uninsured on their homes, right? And so they said insurance companies can't cancel for claims. But what that has done is it's caused homeowners insurance companies to be very selective on the front side.
Correct.
So if they think you've got a claims problem, I mean, if your basement's flooding every time there's a rain and you put in a claim, by the time you get to claim 3, they can't cancel you. They can surcharge you, right? So they'll keep jacking your rates, but they can't cancel you. But what happens is, let's say that you call me up and say, Rick, I've got, my rates are through the roof and I'm really upset about it. I've got 3 claims and I want you to quote it. I can't quote it with any of my preferred markets. They will not take it.
Right.
Because they look at it and they say, this is a problem account. And if we write it, we can't get off of it. Now, I have some really good markets in the, we won't get into this deeply, but I have some really good markets outside of the admitted markets for Pennsylvania. Right. If you're not admitted, you're not governed by the insurance rules of the state of Pennsylvania, which means you can cancel for claims. And I have some good markets that can handle that, but you're going to pay a lot of money if you get to that point. So homeowners,
Once again, manage your
insurance.
manage your
Yeah.
risk, right? Like, don't call in if it's a $400 handyman job, because your deductible, first of all, is going to be higher, and it's going to still ding you as a claim, whether they had to pay out on it or not, right?
Yeah. And again, that's the claim thing, right?
Right.
So, you know, you have to look at, I mean, the deductible thing, not the claim thing, the deductible thing. So you have to look at your deductibles and think realistically, if I have a $1,500 claim and I have a $1,000 deductible, am I really going to put that claim in?
Right.
Should I put that claim in?
Right.
Because now it's a mark.
Right.
You get another mark, and I can assure you, if you have a couple of claims and you forget to pay your bill, that insurance company is going to go, thank goodness, we're not reinstating
yes.
you.
Oh, yes.
Bye-bye.
And they will also send someone out to inspect and go,
Yep.
oh, look, there's a piece of loose siding.
Yep.
Right?
Oh,
You better get that
you
fixed.
better hope it's loose siding.
Right.
Because they might say you have cracks in your driveway. You need to get your driveway replaced.
Yeah, right. So they
Yeah.
just because they can't cancel you doesn't mean they can't make your life
Correct.
a little bit more difficult.
They can
right?
give you requirements to fix up your
Correct.
property, and if you don't do it, and believe me, they're going, please let them know.
Yeah. Don't fix it. Don't fix
If
it.
you don't
fix it."
comply, they can cancel you for
Right.
that. So you just, again, manage your insurance.
That's fascinating.
A couple of interesting coverages that have come about recently that people need to know about on homeowners policies. I really applaud the industry for trying to kind of define stuff that was nebulous or unaddressed in the homeowners policy. A couple of them are everybody should have water and sewer backup in their basement.
Right.
So even if you don't have, we found on September 1st with 9 inches of rain, lots of people that never had water in their basement before,
All of a sudden.
but all of a sudden they have water in their basement. We really, there's only one guy in my book of business that I know of that doesn't have it, and he lives on Hilltop Drive. And he said, if there's ever water in my house, you're going to be snorkeling to your office.
Right.
And I'm like, maybe scuba diving, not
Right.
snorkeling, right? But I documented with him that he doesn't have it. Everybody else gets it because there are things that can happen.
Right.
You know, you can have
And
water pipe burst
Correct. It doesn't have to be a flood. It doesn't have
under
to be
the
rain.
floor
Correct.
that pushes water up through your sump hole. Some pumps break.
Oh, yeah.
I just sent an email to a group and said, if you do nothing else, make sure that you get a new sump pump,
Yep.
make it a cast iron as fancy as they can make it,
Yep.
put a battery backup on it,
Yep.
or put a generator in, because when you have water in your basement, it is the worst thing in the world.
And that is one of those things, unless you don't want to find out the hard way,
Yep.
how much of a pain that is.
Oh, it's horrible.
It's money well spent.
Yeah, it's money well spent. A couple other endorsements that you are coming into the industry right now is roofing and siding matching. People don't understand what that is. So when Hurricane Sandy blows the the west-facing plane of your roof shingles totally off,
Yep.
but then the east-facing plane isn't impacted at all, the insurance company is going to come in and they're going to put new shingles on the west-facing side of your house,
Right.
of your roof. But if your shingles are 15 years old and they
can't-
were black and they're now this interesting shade of gray, and they put black shingles on the west-facing side, right? Your house is now two-tone.
Right.
I don't want two-tone roof. I want you to put new shingles on the other side of my roof.
So they would
Well,
do both sides.
they never had to do that. Now you can buy coverage, $10,000, $20,000 of coverage for replacing the undamaged portion that doesn't match.
For the matching.
And where it really comes into place is siding, because siding, when
They-
they discontinue the style,
Oh, correct. They do that
the
deliberately
color fades.
every 5 to 7
Yeah,
years.
exactly.
They're smart.
so you get an end that blows off, but the other three sides don't match.
Right.
Will now pay up to 10 or 20,000 to match that.
That's awesome.
The final coverage is buried utility lines is now a coverage you can purchase. So if you have like Bucks County Water and Sewer Authority, I just got another letter from them saying, hey,
I can't
reminder.
like every 3 weeks, it feels like.
But that's only your sewer lines,
Right.
maybe your water lines. But the insurance company's coverage is buried utility lines. So that's electrical, cable,
gas.
gas,
All of
water, plumbing. And it's if something happens and they have to dig up your yard and replace the line. Our coverage for 10,000 is like $45, and for 20,000 it's $55. And when you look at what they charge for the sewer authority just to do the sewer and water line coverage, it's more than that.
It's insane.
Yeah, it's like 75 to $100. So that's a coverage people don't really know about on their homeowner's policy.
Well, thank you.
Yeah.
This has been a educational experience. A lot of crap that no one tells you definitely came out in this one.
I know. It's like drinking from a fire hose. I apologize. But, you know, we have limited time and lots of information.
So thank you everyone for listening, and we will be back with another episode.